worthless value. Ladies and gentlemen, here's bonds monthly. Very, very crucial reminder, which potentially can happen on S&P, which let's hope will happen. Bonds collapse completely from reversal zone, showing you very, very clearly. Not a good place to buy bonds. Ouch. This was a very good place to buy bonds. This is a very good place to exit bonds. This is the end of the minor trend, where S&P is dancing the entire morning at the end of the minor trend, correct? 3 bullish trades this morning. And this is what accomplished so far this month. 34 trades, 29 positive. All the same formula. So, let's compare bonds monthly to where S&P monthly is dancing. Will S&P head to here and find buyers just like bonds did? One step at a time. S&P collapsed from reversal zone, as expected, after 9 months of worthless bearish correction, as spelled out for years, posted on social media, forever and ever and ever. Price comes to reversal zone, get the heck out. This is not the place where you entered to. And that trade yesterday on oil was flawless. Reminder, bullish news, complete collapse. Price does not care about fundamentals. When it comes to reversal zone, collapse is absolutely warranted. Price does not care about anything, as all preset in price far in advance. Doesn't matter what you trade. If you trade on fundamentals without Fibonacci levels, nothing good happens. Never, ever, ever, ever. It's quite fascinating here, stories of people who've been buying Apple at 120. That's the kind of story that breaks my heart, frankly. As you could see clearly. Who cares about Apple earning? Not price. Everything preset in price, far in advance. Second time around, Apple will revisit this level, will be crucial. Right now, Apple in worthless bullish correction. The dance is on, it has no meaning. None whatsoever. Sellers mean serious business. Buyers are worthless. Identical dance to S&P monthly. All the same formula. Knowledge of Fibonacci levels as investor, not just as a day trader, is the key. Price is the same everywhere. Doesn't matter if it's hourly chart, doesn't matter if it's daily chart. Complete collapse from S&P from reversal zone. S&P just very tired this morning. Dancing very pretty at the end of the minor trend. This level is broken, S&P is heading to here. We know extremely well that sellers mean serious business. We know extremely well it's very, very temporary dance. But the end of the minor trend is the most crucial support in the market structure. Because we always have minor trend. And here are the buyers on S&P again. As I warned you, this been our dance this morning. Shorting way too late. Short from here, from reversal zone. So if you knew this level, you ignored all the plead. Buy, buy, buy gold. Ouch. When somebody comes to me and says, I bought gold at 1800, all I want to say, why have you done that to yourself? Price was telling you, it's heading south. Gold in bullish correction. The response on gold at 1200 is very crucial. It's not the time to buy gold as an investor yet. All the same formula. Look the dance gold had been doing the last 2 years. Reach the end of the minor trend and dancing back and forth. Messy fluff? No reason to buy gold yet. PCLN weekly. Reversal zone. When price comes too close to reversal zone, you exit the position. You're not entering near this level. And here the buyers again on S&P. Wouldn't that be magical if it has meaning, not bullish fluff? FGBL, very powerful reminder. Never short in the end of the minor trend. And remember that every single support and resistance level is not random. Price spelled out this support and resistance on FGBL hourly since September 17th, playing out today, September 24th. What is FGBL telling me? This level is broken, price is heading to here, eventually. But nevertheless, if you were trading FGBL, you exited your position at this level. And if you're gonna get lucky and price collapses here and you know the rules, you will be buying again. Another option only outside of this level, never into resistance level. Never, ever, 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 never works. The worst idea ever. Doesn't matter if you trade oil monthly, FGBL hourly, or S&P 3-minute chart. It's all the same formula each and every time. I love your questions. While we're monitoring this push on S&P, I also would like to remind you what happened on oil from the end of the minor trend in 2011. S&P can do exact same dance. This was a bullish rally on oil. From 80 area, 2 years in a row. The end of the minor trend is broken and oil collapsed. The dance is on. The same exact thing I'm expecting on S&P daily. What I can do is tell you, we're at daily support. Right now S&P is telling me it's heading to here. Just like I warned you. This is what S&P had shown clearly. It's dancing at the end of the minor trend. Trading 101. All the same formula. If you put yearly chart on or 1-minute chart, the dance on the price is identical. Know your levels. The end of the minor trend is broken and you invest in oil stocks. You better get the hell out of this trade. And if you know AlphaWaveTrade Method you are shorting from, 1 of 5. Fourth bullish trade of the day, because the price is dancing at the end of the minor trend. Bullish rally can pick up the steam, but only if you know and understand that every Fibonacci level is very important target. This one is the first target. So, S&P blasting through 1911.50. Bullish rally migrates into hourly chart. But one step at a time. 3 points, 1 lot 150. 3 points, 10 lots 1500. 3 points, 20 lots 3K. Choice is yours. What account size you have and what you trade. Exact same level where S&P had found buyers on monthly at the end of August and in November 2014. Exact same level where Apple had done so, correct? On the previous screenshot I had shown you earlier. Apple and decision point 2, where bounce came from. Bullish rally on Apple monthly never transformed into yearly chart. Bullish rally on Apple monthly had ended at reversal zone completely. And as I warned you, here's the selling pressure on S&P. Just like the buying pressure on Apple. Every single Fibonacci level identifies crucial support and resistance levels in the market. This was decision point 2 on S&P daily, where our lovely 9-point trade had ended. Looks familiar? We may see exact same collapse right here. Price respects the end of the minor trend. That's the range. If S&P will continue dancing at the end of the minor trend, bias here remains bullish. You need plenty of space prior to this level. As you witnessed the last 3 days, buyers continue picking up this steam, shorting from as high as possible. And here is the reminder. Our trade once again told you, do you know where to take profits off the table? Do you know where crucial Fibonacci target is? All the same formula. Don't matter if it's FGBLN, dancing at decision point 2, Apple, S&P monthly, or very short charts. Formula remains the same. I will give S&P 10 more minutes. Let's document this trade. One tick to get the heck out of this trade. We are out of S&P. Decision point 2 reached 2 points. Would make it trade number 35. Correct? We completely ignored decision point 1. We couldn't touch it as our target. Why in the world would you do that to yourself? The decision point 1 earlier we took as a loser. Ratios made no sense. We took decision point 2 as our target. Move stop outside of break-even. This is all there is. The dance at the end of the minor trend. An ultimate test of your knowledge plays out. If S&P will be stuck here in a counter trend, that's what we'll get. This level is broken, S&P is heading to here. This level is broken, you respect support here, as you witness what happens here at decision point 2. Then S&P collapsing to here. Pure price for entry and Fibonacci for exits. No need to make trading complicated. What you trade is up to you. Class starts from scratch on Monday morning. If you decide to sign up today, you will be in the class tomorrow in Fibonacci course, learning how to identify these methods. Any questions? I'm always open to hear from you. 925-257-4298 or info@alphawavetrade.com. So if buyer's not picking up this steam in the next few minutes, I am out. Clear? Sellers are very, very tired and buyers are weak. Know your Fibonacci levels. Know where to look to short from. Know your crucial resistance level. The same thing S&P had done on daily. It had done on very short chart. Respected crucial resistance level. Shorting near these levels was not an option. The bullish rally is already 5 bullish trades later. How many points? 10. And it's just the start. If you know the rules, you know what to do and where to look for shorts. S&P could be dancing at this level for the next few hours or for the next few weeks. Knowledgeable trader knows shorting into the end of the minor trend is not an option. And that's the magic of the price and Fibonacci. It never gets old, I promise. So trading room, have a marvelous weekend. Alphys, let's go into the class. Everybody in the trading room, I always appreciate your questions and your comments. Tomorrow trading room is closed. Tomorrow devoted to Fibonacci class.